Samindra, mutual fund story can be summarized in one line: mutual fund sahi hai, right? That's the sum and substance of the message we are trying to take out. Yet I see it is the most complicated way in which people approach investing in mutual funds. They treat equities like Mahalakshmi race course, instant gratification. Why is this habit not changing?
I think that's difficult to understand actually. I think if you look at the investor profile globally too, I think most people talk long term but look at short term returns.
Yeah, it amazes me. We made cars, we made moons, we want to.
It is true across the globe. If you go to see how Japanese investors invest, it's similar. Everybody talks long term, but they'll start seeing the navy from the next day. So I think it's hard. I think investor psyche and the fact that you get data on a daily basis, maybe that too is a bit of misleading investors. In a lot of funds where you invest in private equity funds, there is hardly any data available of what you're doing. When you invest in a house, you don't know what the price of the house is on a daily basis. So to that extent, I think availability in the sense that people are tracking it so closely. If you've done your homework well, chosen the fund you would want to invest, the philosophy of the fund house, the people who are running it, the processes, the systems that they have, I think you should be fine. You will have bad years, but over a period of time, I think as long as you stay in a cycle, and this is the thing, people only look at the cycles in halves. So either they have seen an up cycle and they think it will continue forever, they've seen a down cycle and they think this is going to be the way it is. Nobody has the patience to be through the cycle, and that's where returns are made. When you're through investments across cycles, that's how capital formation happens.
I think today the entire ecosystem, including media, has really done exceedingly well in saying why SIP is important and why you should stay in the long run. And the good news, and we did a little more data analytics on SIP, and what was strange to figure out is actually the high value SIPs which belong to the HNIs were the ones which actually dropped off. The ones which were the mass affluent and the mass actually stayed on. So when you start dissecting it into above 25,000 rupees, 10,000 to 25,000, 5,000 to 10,000, 3,000 to 5,000, 1,000 to 3,000, the lower you went in terms of denomination, the less was the attrition in terms of stoppages. So clearly we are seeing a maturing market, and that's a very good sign for the future for all of us.
India in a sense has broadband, television, satellite, all the mediums are not very deeply penetrated. But frankly, if I look at the bulk of concentration for SIPs, it's not gone beyond tier 1 cities. It's not gone to tier 2 at all. Even within tier 1, the concentration is within 6 metros, and within 6 metros it is Bombay. Why is that?
So again, has it changed in the last 4 years? The answer is yes.
How big is the change?
Obviously, when you look at it at a AUM basis, it's not very big. But if you look at the new sales basis, you're seeing significant amount of change which is happening. So if the AUM percentage of the big cities still is 90% of the AUM versus 10%, vis-a-vis the new sales maybe at around, I don't have the exact figures, but I think it would be more like a 78, 80, 20. And the interesting part is the more you go into the hinterland, today you don't need to explain SIP.
Okay.
SIP has now become a kind
it's
of
like saying thank you and sorry.
Yeah, they know what SIP is. If I go and say and talk to them of SIP, it's amazing. I can narrate an incident wherein I went to Bhusawal, and Bhusawal is really a small town in Maharashtra. But if I went to Bhusawal and I was surprised that one particular distributor who was only focusing on SIP, and he was saying that he does about 20 to 30 SIPs a month. That's a big number for a place like Bhusawal. So it's a very interesting story that today SIP has become a very acceptable and common name.
Kailash, a very basic question before we wrap. You said that a first timer should start with more like an equity of diversified scheme. It's safe, which means you should keep your choice simple.
Yes.
But in today's environment, there are more than 24 mutual funds. All mutual funds have variety of schemes. They have unique offerings. Now, for a first timer who is just taking a baby step in a SIP, How do you find out whether your scheme is the best or your peer scheme is best or your scheme is better than your peer? It's a maze. It's a complicated maze. Every mutual fund manager will have some USP. Somebody has 5,000 rupees a month and choice to buy one scheme from one mutual fund.
Yeah, so it's a tough decision, and I think this is where either you need to be that qualified that you need to understand this whole spectrum, or you need to go to a good advisor or a distribution partner who will advise you on this, because they are the ones who are going to do this analysis to give you the right scheme. If you look at real long term, 10 years, 15 years, the big difference between the performing schemes isn't that drastic. Okay, it'll be few percentage points here or there. It's the job to really choose that. But the big mistake which people make is over diversifying into too many schemes. So, we have seen customers with portfolios which are like 15, 20, 30 schemes. Yeah, whereas actually a 6 to 8 kind of a scheme portfolio is a good enough, which means he can choose 2 from one, 2 from another, 3 from one. It's a kind of a mix and match on that. I think today with the information availability online, what you people do through such shows, I think the information is available. I think the discipline needs to come into the picture. And I think that is what is lacking today, the discipline. Because people tend to just look at the immediate past returns and decide the scheme, rather than look at a longer term picture in which how a fund manager has played through cycles and delivered returns. So I think good education or a good advice helps a person choose those 1 or 2 schemes for a first timer. But like I said, a large cap or large cap oriented scheme for a less risk averse investor is always preferable. And just one point before I just talking about, we are talking about disruptions. I believe that technology is going to be the biggest disruption in the growth of this industry. The access which technology provides today on your fingertips, sitting in any remote area, to buy a mutual fund with a few clicks, sell a mutual fund with a few clicks, is immense. And what you're going to see is that today we just have about 2 crore investors in the mutual fund industry. I'll not be surprised if in the next 3 to 5 years this number will be in the 8 to 10 crore region. So we have a massive growth ahead of us, and I think we need to just be very happy that we are in the right industry. Like Larry puts his bets on areas which grow, I think people should bet on the mutual fund industry, because this is a place where we'll grow.
You don't own a mutual fund stock,
I'll just
right?
add something to what Kailash says. So like you said, what is it that an investor should look for? I think it's fairly simple in that sense. Yeah, an investor should look, like I said before, the organization that runs the mutual fund. That will give a lot of dope of how one should invest. Second is the philosophy that the organization runs. Is it a short-term oriented fund house? Do they chase momentum? Are they value seekers? The third thing is the people. People makes a lot of difference. Yeah, if you know the right kind of people you would want to back, stay with them through thick and thin. It's not that all fund managers have a great time all through, but they go through cycles too. I think as long as you stick with the right people and have the right processes backing them, I think you'll hit a home run. Yeah.
Kailash, Samendra, fantastic to have you both. I guess the differentiating factor for our viewers here should be that when you're choosing a mutual fund, focus on the word experience, and when you are choosing your financial planning objective, look at the word patience. I guess these are 2 most important takeaways for our viewers. But thank you for joining us, and thank you for tuning in, and thank you for watching Investment Ki Pathshala.